All right, guys, here's the headline that someone just sent me. I want you to listen to this. Stock market euphoria is within striking distance of flashing a sell signal. Bank of America warns. Dun dun. All right, so what I want to do is I want to show you the actual article here. And the article itself is not on, I found it on CNBC, but they wanted me to pay them to read it. So I found it somewhere else. But just look at this. You got this guy. Oh my God, there's like a ghost coming to get him or something. I don't know. But then you hear that, we hear here's the headlines here. A B of A contrarian indicator, okay, that measures investor bullishness rose for the third straight month to a 10-year high in March. I don't know if 3 months in a row is a big deal or a not big deal, a 10-year high in March. But what I do know is I'm starting to get scared. I read these words and I'm like, oh my God, am I okay? Am I okay? The signal is less than a point away from indicating overextended optimism. Have you ever made money on overextended optimism or underextended optimism? I mean, this is all BS languaging, and it is being designed to scare the hell out of you. Overextended optimism. Guys, we're going to get to price charts in a moment. We're going to look at what's going on with price charts, and we're going to do it in a pretty neat way. I'm going to look at major indexes, and we're going to look at them in a way that is very, very clear what it's telling us, and we don't do overextended. And then here's the last thing. B of A's indicator forecasts a lackluster 6% total return in the S&P 500 over the next 12 months. Right away, I want to know, what has their last 100 forecasts look like, right? Because that's the reference that we need. We need some sort of reference. And then it goes on and just blah, 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 this and this number and flashing a sell signal and just all this crap. And it is crap. So let's go over first to, if crazy shit's going to happen in the market, that means people are going to have to move their money somewhere, or they move it when they get scared. Now, what I'm doing, if you look at the screen here, actually, let me go. I think this is good. I'm looking at these are monthly bars. So these are candlesticks. Each one represents 1 month, and this price chart goes back 20 years. So we're looking at 2 decades, basically the entire 21st century. So if people collectively are going to get scared, there's a few places they're going to go. And we know there's only a few places they're going to go. There's not 400 places they go. There's only a few. One of them is gold, right? Historically, when people get more concerned about the future, they move into gold. Now, gold's not down and out. If you look at the price chart here, you can see that in the 2011, 2012, there was this band that it just could not break above it. Gold couldn't get above and stay above $1,800. It also had a hard time breaking below, let's just call it $1,600. So there was this $200 band. Well, in 2000, gold broke out. So there's its old high. I'll just do its old high right there. So you can see gold broke out, and it did really well in the first half of 2020. Like, it did really well. Like, almost nothing was beating it, especially if you bought like a precious metal mining index. But then it stopped going up here in August. And we know in August it peaked, right? So here's gold. Now, the thing is, it's not necessarily dead or down and out, but when you start looking at it relative to other parts of the market, it's relatively weakening. So money is not going into gold. Other places money would go is into long-term treasuries. That's not happening either. Yes, it went into it at the beginning of 2020, but about halfway through it stopped going into it. Here's kind of the NASDAQ 100 of bonds. Zero interest rate coupon, or zero coupon bonds. And you can see that it had this big spike here in March, where last year the market fell, right? But really since then, it just kind of turned over. And it almost doesn't matter which bond you look at. Some bonds are better than others, but they're not going up. They're either going sideways. Here's the total bond market of the US right here. Here's the international bond market, which net of everything is probably the best looking. But money's not flowing into the bond market. And we're looking at monthly candlesticks here. So we can eliminate out a lot of the noise and say, okay, if people are about to get really, really scared, and let me throw in the US dollar here. money is not pouring into the parts of the market where people go when they get really scared. So the first thing to counter, and the reason I bring this up, and I think it's kind of fun to look at monthly bar charts, right? Because again, each bar represents 1 month and we're looking at 2 decades of information, is we can just really quickly see like, is the euphoria, I want to go back. It was such a great title. Euphoria is flashing a sell signal. Okay, the price charts aren't seeing it. Forget about me. The price charts aren't seeing it. Well, is the S&P 500 dividends reinvested? Nope. At the end of March, it closed at the highest closing monthly price ever. Well, what about the NASDAQ? Is the NASDAQ crashing? No. The NASDAQ closed at the highest monthly close ever. That's the NASDAQ. Well, what about, let's go to the German stock market. This is called the DAX. Okay, nope, that closed at its highest monthly close ever, guys. That's this one right here, kind of, I'll put it between the two. That's that one. And look what the DAX, it could not break above 13.5. It finally broke above. So you have what, the 4th largest economy in the world breaking to new highs. You have the S&P breaking to new highs or closing at new monthly highs. You have the NASDAQ closing at new monthly highs. How about the Dow Jones closing at new monthly highs? How about small caps? Small caps closing at new monthly highs. You can see that. Now I'm doing this in April, so you have the new April bar, but you're looking at the second to last bar. And so as we go through, here's Europe itself. Let's just look at Europe, not Germany, but here's Europe, the iShares MSCI Eurozone ETF. Look, it could not stay above $42. What happened at the end of 2020? It broke out. Now, Europe has not had the run that the US has had. By the way, guys, again, this is 2 decades of information right here. That's 2008. So from 2008 up until 5 months ago, the European stock market did nothing. And it was actually going sideways way to the past. It's literally not done anything for about 20 or 25 years. But now these markets around the world are breaking up. And not every market, right? You say, well, RC, what about utilities? Okay, utilities is not out to new lifetime highs. That's an area that people would go, right? There's something called SPLV, SP low volatility, right? This is where people have been taught to go who want to be in the stock market but have lower volatility. This is not what lower volatility looks like. These 2 drops just from intra-month high to intra-month low there is a 38% fall. The NASDAQ did 28% fall. The S&P fell 34%. So what's neat about looking at monthly charts and what's amazing about learning, being taught, being trained how to read price charts is you can read a story about the stock market euphoria is within striking distance of flashing a sell signal. And you go, oh my God, I'm 60 years old. Is this true? Am I going to lose everything? I don't want to go back to work. And B of A sell side indicator, which is based on the average recommended equity allocation of 9 Wall Street strategists. Seriously, 9 Wall Street strategists? I have no idea what that means. Sell signal? Guys, when you hear these words, when your brain hears these words, it freaks out. You have to be trained to use a filter. This is how you're going to grow your money for the next 30, 40, 50 years. And so here, as we go around and we look and say, okay, what about communication? Communication is at new lifetime highs. We can then look at some individual stocks. Here's Google going out at new lifetime highs. And so we are hit with these articles. We are hit with information. And to understand and be taught and to be trained to use a price chart as a filter, it truly is a life changer. It changes your life because you're able to eliminate the hype and the fear and the BS. And so just a quick run through some stocks. Let's actually look at emerging market. What's going on with emerging markets here? So here's interesting. Emerging markets. This is '08 right here. This is '08. It's actually, it's '07. I'm talking about the crash. And look at that. Emerging markets had a hard time breaking above. Now they finally broke above here, but then this guy named Donald Trump came out right there and said, we're going to war with China over trade. And that's the trade war high you'll often see me point out on many charts. So emerging market was about to break out and Trump squashed it. Now, it did not hurt the US stock market. It actually hurt Europe probably the most. And so you can see here, emerging markets finally broke out above to new highs there. Now that's its new high above the trade war high. And for the last 1, 2, 3 months, it's just kind of digesting, finally breaking out. So you have emerging markets, which is about 2/3 of the world. You have Europe broken out, if that's even proper language, broken out, upside breakout. And you can literally go through and start to say, okay, if things are really bad, what should be going up based on price? Gold, bonds, cash, utilities. What about staples? Is staples going up? Staples went out at new lifetime highs. But again, you have to look at that relative to other things, right? Because if you price staples in S&P 500 units, and I understand that this might be a confusing price chart, but just know that if these bars are falling, that means the staples sector is greatly underperforming the overall stock market. And then you might say, well, what would be other evidence I need to CRC to have me start to think that the markets are stronger than, say, maybe the news outlets are telling us? And this is an important question. Like, coming up with the right question is very important. So here's copper. And this is copper's lifetime high right here. I'm looking at this 2011. That's its lifetime high right there. And you can see from over here, copper is making a run. Guys, it's not that far from new lifetime highs. It's about 15% from a new lifetime high. So you have to think of what's the environment when copper, I'm going to zoom way out to look at a big history, big price chart of copper. Copper could not get above $1.45, right? This is an actual index of copper. It just went sideways for a whole bunch of time, a couple decades. We're looking at 40 years here. And then it's just been in a big old mess. And it looks like it's wanting to take a run. Well, it is taking a run for this top price up here. If copper is going up, that means people are buying copper. That means stuff is getting built. XHB is the housing. It's actually the home builders ETF. I'm zoomed out to 40 years, which is ridiculous for this because it hasn't been around. But here's the home builders index, the Spiders S&P home builders ETF. This was March right here, went out to new high. It's high again. This is actually impacting a lot of people. It used to be that real estate and stocks were not coordinated. They did not, there was no, I said coordinated. They were not correlated, but they are correlated today. When the stock market goes higher, that top 10% of people are richer. They have more money. What do? They buy a bigger house. So now you have real estate. I'm talking residential real estate right now, by the way. You have residential real estate and you have the stock market. They are correlated now. They are not these two separate assets. Again, residential real estate with the stock market. They move together. And this is a reason why real estate is just on fire right now. I mean, it is absolutely on fire. This is the Case-Shiller. This is the Case-Shiller index here. And you can see it absolutely took off in June of last year. Now, to me, that's pandemic. People have been reframed. Their brain has been reframed. Like, wait a second, I don't need to live in California. I don't need to live in, Alabama. All of a sudden they can live. It's changed the way their brain operates. People are moving to Idaho, even though the company they work for is in Washington State, and so on. You can go live in Thailand as long as you have an internet connection. And so this is disrupting and changing and accelerating the behavior of tens of millions of people. And that's why we're seeing houses get 50, 60, 70 bids on them, because people are feeling richer and because people are like, wait a second, I don't need to live in X, Y, or Z anymore. We can go move somewhere else. And this is pushing people. Plus, interest rates have dropped significantly. And when people buy a house, they don't buy the house on the purchase price. They buy it on the monthly expense. What does it cost each month to have? And so we have markets now getting more and more correlated, residential real estate and the stock market, okay? Commercial real estate's different. But this is what's happening. And so when you read an article about market euphoria signaling a sell, okay, being taught to look at price charts and go, okay, well, let's just put in something fun here. Here is frontier markets. Frontier markets. Those are the teeny, 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 tiny ones. Look, it's broken above that price. Now, it's got to stay above that price, but this is a sign of strength. It's moving up towards that 2018 trade war high. It's moving up towards it. We can go look at microcaps. Microcaps, which are smaller than small caps, they've broken out and up, right? So they're moving higher. They're actually digesting the move because that's a pretty big move. But what we're seeing is mega cap. There's the Dow Jones doing well. Microcap, which I just showed you. So that's the entire range. Then you can go S&P growth. Growth is doing well. You can go S&P value. S&P value is doing well. And what you have is a market that's moving higher. Thanks, guys. I appreciate you being in my world. If you like this, please hit the like button. Please subscribe. It makes a difference. And if you like these videos, you're going to absolutely love, I put this free course together, called Clarity and Control. And in my 2 decades of training people, there's 2 things I've heard over and over and over 2+ decades. One, I want control back over my money. I feel out of control. I feel like the control has been taken from me. I want to get control back. Okay. The other thing I hear over and over again is I don't have the clarity. I need to be clear about what is working and what is not working. And owning 50 symbols or 100 symbols from a big box advisor is not working. So I put this free course together. It's 4 videos. It digs right into the meat of what works. It is absolutely free. It's called Clarity and Control, the 2 things that people want most with their money, whether they're 50, 60, 70, or 40 or 30 or 80. Who doesn't want more clarity and more control over their wealth? So if you like that, it's in the description. You can click on that and get access to that immediately. Thanks, guys, for being in my world, and I will see you on the next video. Okay, bye.